Hello and welcome to Money Control. Well, the markets are down about 1% on the Nifty, and this is because of a mild risk aversion that is setting in because of some disappointments in results, but more importantly, the US credit rating downgrade this morning. How does this impact us? This credit rating downgrade that is coming after 10 years, how does it impact our markets? How does it impact global markets? To know all of this and more, I have with me a very special guest, Mark Mobius, investment guru, global investing guru. Mark, thank you so much for joining me this afternoon.
Pleasure.
Mark, first off, how do you read this credit rating downgrade for the US? It's not unknown at all, but every time an event like this happens, it might change a few things. Do you see anything altered at all for financial markets from here on?
Well, I think what it means is that investors around the world have got to start thinking about diversifying away from the U.S. I'm not necessarily saying you reduce the U.S., but at least to think about diversifying as your assets increase, diversifying more into international markets, and particularly emerging markets, and more specifically, India. So I think this downgrade in the U.S. will probably cause a lot of investors to think that they can't rely too heavily on the U.S. market, although the U.S. market is still the biggest in the world and still very important, but they've got to be diversified into other areas.
Sure, Mark. You know, we've talked about this in the past, but somehow whenever the world is in trouble, including, it's very ironical that even when America is in trouble, there are questions about fiscal prudence there. The dollar safe haven trade continues. Even today, if you see the reaction, it should actually be the contrary, that you should see some weakness in US markets, you should see weakness in dollar, but exactly the opposite happens. So how do you see, I mean, do you see this as an important point, or is it something that will come and go and this is going to happen rather slowly?
Well, you must remember, if you look at the US dollar index, you'll see that it's come down since last year about 18% from the high point. And so it's down substantially, which indicates that there's been a stronger alternative currencies like the euro and other currencies that are doing better than the US dollar. So given that, that's another good reason for people to think about diversifying into other currencies. Now, I know a lot of people say, oh, emerging market currencies are always weak, which is not the case. Some emerging market currencies are actually doing quite well against the US dollar. So again, I think this downgrade will give a lot of investors pause for thought about what to do with their portfolio. A, diversify more into emerging markets, and B, go into equities, get into equities and out of fixed income.
Sure. Mark, again, when a foreign investor comes to India, all these years they have been factoring at least a 3 to 6% depreciation in the rupee. That's part of the equation. Do those assumptions change from here on?
You must remember that yes, they will probably you'll probably see a continuation of that trend, a slight decrease in the rupee value. But you must remember that many of the companies in India are exporting in US dollars, in euro, and other currencies. So that offsets the problem with the rupee. So, you know, if you're earning in dollars or in euro, you're paying in a falling rupee or weakening rupee, your margins are getting better. So you have to look at it from that point of view. A weaker currency is not necessarily a bad thing if you're investing in equities.
Sure, but as a whole, when you invest in, there are index huggers, there are all kinds of institutional investors who come into India, and the assumption is that you have to count in some amount of weakness every year for all these investors. Does that equation, will it be revisited this time around?
I think it will be, as India's growth story begins to be more widely known, and as the Indian rupee becomes more internationalized, you'll see a change in attitude towards the rupee. Nevertheless, even with this slow depreciation of the Indian rupee, the growth in companies and the growth in the index will more than offset that. So in US dollar terms, you'll be in good shape.
Sure. Mark, this year alone, if you see, the US markets have actually done much better than Indian markets, for that matter, any other emerging market. Indian markets are perhaps up about 8% or so this year till date, but US markets on the S&P 500 is up about 50% or so, on NASDAQ maybe about 40% upwards. Again, is this going to get bridged rest of the year? Do you see markets, Indian markets, doing much better from here on?
I think it will. I think more and more money is flowing into India, and for that matter, other emerging markets. And I think you'll see a change, and I think it'll get better against the US market.
Sure. Mark, you have been bullish on India for quite some time. Can you articulate at this point in time, what are those factors that make you really bullish on India? From a more near-term perspective, near to medium-term perspective.
Well, even in the near term, of course, long term as well, young population, technology being used more widely around India, all these factors are having an incredible impact. And at the bottom line, this incredible real growth. This high single-digit growth in India is quite remarkable for a country that size. So all these factors makes me quite optimistic. Now, of course, there'll be corrections along the way, but in the long term, we're in good shape in India.
Do you see growth surprising on the upside for FY24, or would you still be a little circumspect? Because, of course, compared to last quarter and last month, one good news is that the US Fed is no longer expecting a recession. We've been expecting it for the past many, many months, but the market also seemed to be accepting the fact that there might not be a recession and there might be something like a soft landing. At this point in time, how would you weigh the risks?
Well, I think those assessments of the US market are probably correct in terms of a good US market going forward, at least for this year, despite what the Fed does. And of course, the Fed is probably going to be slowing down on any rate increases. So that alone will be good for the market. But for India, the good news is that we're seeing more and more investments flowing into India. So it's quite possible that the growth rate in India will surpass what we've seen last year. Of course, last year, must remember, there was a recovery from COVID, the shutdowns and so forth. But this year, we might be surprised on the upside.
What makes you think there will be surprises on the upside? Because most of the street perhaps thinks that it might be a little more sober than that.
Simply because of what's happening globally. You're seeing an incredible amount of spending taking place. And remember that China is now focused on increased consumer spending in order to revive the economy. So the Chinese economy, as you know, has been a big driver globally. And of course, with the recovery in China, that will impact all countries, including India.
Sure. And if there is a recovery in China, Mark, how do you see fund flows getting redirected? Would you see increased allocation to China? Because a lot of investors have indeed burnt their fingers in China. Would money still chase China, or the allocations to India should continue to be buoyant, irrespective of China being in the radar or not?
I don't think you can expect a big surge in money coming into China this year, because it's going to take time for confidence to return among foreign investors, because as you rightly pointed out, they were badly burned in the Chinese market. But you must remember the Chinese market is not driven by foreign investors. Local investors are the one that really drive that economy and that market. And once the consumers in China regain confidence, you'll see the Chinese index go up. And of course, people that are investing globally will take notice of that and will probably pile in. So you'll see a sort of an accelerating impact. Probably not until the end of this year and beginning of next year.
Sure. Mark, in your own mind, how do you see allocations for India panning out? because at least in the past 1 year, of course, there has been a lot of volatility in terms of foreign flows. This year we have been very good, especially since March. March, April, June have been substantial foreign inflows. Now, do you see inflows stabilizing at higher levels from here on? Is there, because there is more clarity on sustainability of growth?
I think the inflows will increase. The government, as you know, is doing its best. Of course, the individual state governments are doing their best to encourage investment. And I believe more and more people globally are taking notice of India. Companies, as you know, like Apple and others, are going to be manufacturing more in India. So these flows probably will increase.
Sure. Mark, can you give us some sense of the kind of conversations you have with your own clients and, investors across the world on how they are recognizing this change in India? Of course, we are seeing it in the numbers, we are seeing it in the narratives coming from various people we interview, but from your lens and conversations, can you share some of those instances?
Yeah, the big problem that India faces is size. When you talk to a big institutional client in America or Europe that are investing billions of dollars, they look at the Indian market and they say, oh, it's relatively, although it's a big country growing fast, the market is relatively smaller than what China is or was. And therefore, they have to take that into account, which is why it'll be very important for India to increase the privatization program, privatization of state-owned enterprises, so that the size of the Indian market increases.
Sure. Is that the only concern? Is there anything else that they feel bullish about? Is there anything else that they feel nervous about?
Of course, they're bullish about the factors I mentioned: population, growth, et cetera, technology, and so forth. But what they're usually concerned about is currency. They worry about the currency devaluation and a weak Indian currency. But that, as you know, is offset by the growth in earnings of these companies. And in US dollars, at the end of the day, even with a slight devaluation of rupee, they can do very well. But I would say the big concern, and by the way, it's a concern not only for India, but other countries, foreign investors always looking at the currency.
Sure. But you see that changing only slowly, isn't it?
Yes, it takes time.
Sure. And what is your outlook on gold? I know that lots of equity investors don't like the idea of gold, but every time there is uncertainty, and that too with respect to the US, there is this conversation and narrative that gets formed about in favor of gold. But we also know that gold is also a highly financialized asset, so that tends to go in tandem with the US dollar. What's your take?
Well, as you know, I'm a gold bull. I believe in gold. And it's really interesting. I'm here talking to you from Hong Kong. And about 20 years ago, I had a safe deposit box here. And I put gold bars, the Chinese tail, the gold bars. And I said, look, it's about time for me to sell these bars and buy coins instead. So I went to sell them, and we discovered that given the price that I paid 20 years ago, I've made an incredible return. I think it was about 12% annually since I bought those gold bars. So gold is, from a long-term perspective, is always something you should have. I'm not saying it should be more than 10% of your portfolio, but you should definitely have some gold.
All right. And which year are you talking about? I mean, when did you pick up those bars?
20 years ago, 20 years from now.
Okay, fair enough. Coming back to Indian markets, Mark, you are a value investor. You don't like to overpay. How do you look at Indian markets right now? In terms of valuations, are we overpaying for growth already?
Well, I know a lot of people look at price earnings ratio and they say, oh God, some of these companies are very expensive. We don't look at that. We look at return on capital. If a company has got a return on capital or return on invested money of over 20% and has very little debt and is growing at something like 10%, then PE doesn't matter, because at the end of the day, they will be lowering the PE as they go forward because of the great return on capital. And if you look at return on capital of Indian companies, it's very, very good. The holdings that we have all meet those criteria.
But Mark, even if you were to, pay for quality, how many years of growth are you willing to pay upfront? Because the question really is, even if you have a very high quality company, in the end, if you're paying for 5 years of growth upfront, then your growth rate needs to obviously match up to that. By that parameter, it does boil down to a PE, right?
Not really, because at the end of the day, the E can become very, very big in relationship to the P going forward. That's the reason why it's a good idea to focus on return on capital, because if your return on capital is 20%, then your the E earnings per share, is increasing at a very fast pace. And within a year or two, that PE level will be coming down pretty dramatically.
Sure. So where exactly do you find pockets of value? Are you then voting for the consumer pack, which typically have high return ratios, or anything else?
Well, what we're looking at in India is software companies that have good returns, companies that do industrial components, like APL Apollo is one holding we have. Then we're looking at anything to do with the internet, mapping companies, like CEF Info, that do Map My India, that sort of thing. Anything related to technology is usually pretty good in India, because you've got incredible brains and great companies that are in that area. And then we look at service sectors. For example, we're invested in a company called Dream Folks that do the lounges, airport lounges, that sort of thing. So the great thing about India is that with 1.2 or 1.3 billion people, you can go into any sector and find a company.
Sure. You talked about IT, Mark. Where are you on IT services companies, both large caps and mid caps, right? From TCS, Infosys, or the smaller ones like Persistent or a Mastech. Where do you stand on that pack? Because the market has been very conflicted, and the impact of, till last quarter, obviously the market was, still, a lot of analysts were still expecting that we should be able to see these companies sustain their growth rates without too much cuts. But this quarter, it doesn't look like that's going to be the case.
Well, we are focusing on the smaller companies like Persistent Systems. We're not into the larger companies because they're pretty well known. Our idea is to try to get into companies that may not be that popular, not that well known, but are on their way to become an important index component. So those are the areas we look at. And of course, from quarter to quarter, you'll see fluctuations in their earnings. But over the longer term, as I said, if you've got a high return on capital, you're going to do very well.
So you're saying you prefer mid caps over large caps in the IT space?
Yes. Not only the IT space, but in every space. We prefer those companies that are not in the index yet. Hopefully, we'll be picking stocks that will become part of the index.
Sure. And where do you stand on all these new technology companies like, let's say, PB Fintech or Zomato, Paytm? This pack of companies, where do you stand on these?
We're cautious on many of these companies because they haven't proven themselves in terms of earnings growth over the long term. Some of them, are not really are so young, they haven't really had a track record. And we prefer to go for companies that have some degree of track record where we can be confident that we're going to see those earnings coming in.
Sure. So coming back to mid caps, Mark, what are the parameters? I mean, you clearly said return on capital is an important parameter or a filter for you to look at. Anything else that you look at to see where the opportunity really lies?
Of course, debt. Debt is very, very important. We like to see a low debt to equity ratio. And then industry position. We like to go into companies that have some special niche where there's not much competition in one direction or another. Maybe a oligopoly, maybe 2 or 3 companies at most, so that the company we select hopefully will stand out.
Sure. And any pockets, for example, defense is touted to be a very high growth area. Are you excited about that opportunity?
Defense we're somewhat cautious on, simply because it relies on government decisions and relies on big contracts, and these can fluctuate pretty widely. So we're looking at it, but we haven't found anything that meet our criteria.
Any other pockets where you see exuberance?
I think at the end of the day, the healthcare and cosmetics area is going to be a growth area for India, particularly medical aesthetics. Let's put it that way. Companies that are treating people for wrinkles or some other beautification effort. I think those are the areas where you're going to see growth.
Any particular stocks in that area that you're excited about?
Not yet. We haven't found the right one yet, but we're looking.
Sure. In terms of pharma itself, Mark, pharma has been somewhat disappointing for the markets. I mean, if you look at a really long trajectory, the potential was always huge, but for multiple factors, price erosion in generics or whatever, those stocks have not really performed. On the contrary, the hospital stocks, the diagnostic stocks, those have done fairly well. How do you size up that entire opportunity? Anything that you would like to steer clear of, and those that you would love to back?
Yeah, I think the problem with the pharma area is regulation, government regulation, and restrictions. You are subject to an incredible amount of effort on the part of these companies to prove their drugs will be approved by the US or by the Indian authorities. And that takes an awful lot of money and time. So you can, be involved in a situation where the company has spent years and years and millions of dollars on a drug only to see that it fails. So we tend to be quite cautious on this sector.
Sure. Mark, we head into elections next year. How do you see that panning out? Do you think foreign investors are going to be nervous about elections towards the end of the year? Do you think some kind of nervousness could set in?
Unless things change, unless there's a change in sentiment regarding this government and regarding Mr. Modi, I don't think there'll be much concern, because if Modi gets in again and his party grows into the position that they're in now, I believe there'll be lots of confidence. There will be no problem.
Sure. That's all from me. Mark, thank you so much for taking out time and joining us this afternoon.
Thank you very much. Nice being with you.